Afternoon, everyone. And once again, a very warm welcome. Hope you all are doing well. As investors, we know what sectors or companies to invest, which is based on the information we have access to. But our guest of honor today will share with us a unique perspective what the financial industry does not want us to know about investing. Let us first welcome our guest of honor, Robert Rolih. He is the international best-selling author of one of the best-rated investing books, The $1 Million Decision. Get out of the rigged game of investing and add $1 million to your net worth. Thank you, Robert, for being there with us today. Our founder mentors, Mr. Bishnu Dhanuka and Mr. Sanjay Bhuvania, taught us what there is to know about investing, and our 28-year-old organization, Millennium MAMS, has been spreading awareness regarding financial literacy. And today, more than 5,000 MAMS, I would say women, who are serious towards investing. Thank you, sirs. Robert, he grew up in a poor backwater village in Slovenia and became a successful entrepreneur cooperating with people like Chet Holmes and Brian Tracy, and lost, yes, you heard me right, he lost most of his money because he trusted the financial advisors, brokers, and so-called financial gurus. That motivated him to spend 7 long years of his life researching what is going on behind the scenes of the financial industry. Robert has an MSc in economics from the University of Ljubljana, and today he's a successful entrepreneur with a highly profitable investment portfolio that works for him and not for the financial industry. As a public speaker, he shares his in-depth knowledge with people all around the world, helps them win the financial game of life and avoid costly investing pitfalls. His greatest strength is that he is able to make the complex topic of investing simple and fun. We can totally relate to it, my dear friends, because this is what our mentors do for us. They make the topic, the complex, so-called complex topic of investing, simple and fun. We hope to learn from his experience today, Robert Rolih. It's a pleasure to have you, Robert, with us today, and I invite you to share your financial success formula and some long-term investing tips with us. Over to you, Robert.
Thank you very much for inviting me. It's really an honor to be here. So today I will cover a couple of very, very important topics. And the main topic will be my financial success formula. This is a simple formula that can really change the way how you look at your financial situation, how you can succeed financially in your life. So it's a very, very important formula that we should all teach our children, you know. A lot of my clients who when they first get to know this formula, they say to me, oh, I need to teach my children this first, because this is really so important. Today I will share this with you, but first, of course, maybe I can give you an answer to the question, why should I trust Robert Rolih regarding my financial success? Let me share my presentation, and then I will first share a bit about my story, and then the financial success formula, and then at the end of this meeting we will have a Q&A. Okay? So let me just share my screen.
Yeah.
And just tell me if you see my photo now.
Yes, we can see, Robert.
Perfect.
Yeah.
Okay, perfect. So it will probably surprise you that 10 years ago, I had no clue about personal finance, no clue about investing. So how did I end up teaching people about these topics and traveling around the world and giving seminars and speeches and so on? Well, it's an interesting story. You know, I was born in a very, very small village called Zarečje in a small country of only 2 million population. So this is just like a village in India, the whole country, I mean, it's only 2 million population. And this was a backwater village in the outskirts of Slovenia. And my parents were blue-collar workers in a socialistic factory, and we never had any money at home. And I can still remember my father, you know, with Jimi Hendrix hairstyle, a very tough guy. Whenever I asked for something as a child, the answer was always the same. Robert, we don't have any money. We cannot afford it. You know, and that was the story of my childhood. But, you know, I had something that changed my fate. And that was this desire, this vision where I saw myself as a very successful person in the future. So when I had a chance, I would go to a town nearby and I would go to a library and I would borrow business books. You know, as a teenager, I was reading a lot of books. And my favorite author was Brian Tracy. So Brian Tracy, a very famous guy, a very famous business author. My favorite book was Maximum Achievement. And I would really like to recommend you this book today. So Maximum Achievement, here it's on the right side. This book really changed my life. So, and I was reading these books and I was dreaming about a better life where I would become a successful business owner and so on. And when I was a student in Ljubljana, the opportunity presented itself and I started my own business. I started my own company. And after 5 years of hard work, my company started to become really successful. And we started to earn a lot of money. And I even organized an event, a seminar with Brian Tracy himself. So I invited him to Slovenia as a speaker, and we had a seminar together with him. And this is the photo from this seminar. Oops, sorry, wrong photo. This is the right photo. And here it's me in the first row, listening to Brian at this seminar. And this was really like, you know, going into heaven or whatever, you know, it was like dreams coming true for me. This was the first year when I had a 6-figure income in US dollars, and I just couldn't believe it, you know. Just a couple of years before that, I was a broke student, and now I had a lot of money coming into my life. And, you know, it was fantastic. It was amazing. But you know what? Having a lot of money brings all sorts of problems. And the biggest problem I had was where to put it. And I'm not kidding, you know. I knew that investing is a must. I knew that I should invest for the future, for my family, for pension, and so on. But I didn't know how. I was an entrepreneur. I didn't have a clue about personal finance and investing. So I trusted, guess who? You probably guessed right, financial advisors. So year after year, I gave them all of my business profits. And I thought that they are taking good care of this money. But then, after several years of doing that, I had a conversation with my wife, Sarah, and she said to me, Robert, I know that you don't care what is going on with that money and that it's working there with your financial advisors, but maybe we should just check the status of all our investments. And I said, yeah, that's a good idea. So let's take a look. So I ordered all the account statements from these companies. And when the envelopes arrived and I opened them, it was like, what? Is this a mistake? Are there some zeros missing? You know, money, we worked hard, me and my wife, in our business. Money that we earned was mostly gone. Mostly gone. I couldn't believe it. It was the most depressing moment of my life. And for a couple of years, I just lost my motivation to work. My business results suffered. My life really became very depressing. But I was lucky. I was lucky that we already had signed an agreement with Brian Tracy for his third seminar in our country. And after the seminar, I asked Brian if he can help me with my personal finance because I had these big problems. And I invited him to dinner. And at this dinner, Brian Tracy, when I showed him all of my problems, he turned towards me and he looked me straight in the eyes and he said something that totally changed my life. And it may as well change your life too. He said, Robert, it doesn't matter how much you earn. All that matters is if you have the skills to manage your money and to invest it. And at that time, I realized I don't have these skills. I blindly trust the financial industry. So at that moment, I made perhaps the most important decision of my life. And that was, I will become one of the most financially literate people in this world, no matter what. So in the next 7 years, I invested heavily in my financial education. I went to all the best seminars in the world. I read more than 300 books. I was basically building my financial muscles, you know. And I have also a photo of me then. So this was me building my financial muscles. Okay, no Photoshop used here. So after these 7 years of learning, you might say, Robert cannot go wrong anymore. He knows it all. But you would be mistaken. Why? Because only after these 7 years, I started to realize that there are some tiny details in the financial industry, in the investing world, and if you don't know these crucial details, you will get crushed. And the financial industry will take your money. And I had to find, so nobody at all those seminars, in all those books, nobody talked about these details. And I had to find them out on my own. And today, I would like to share a couple of these details with you. Okay, so this is how I started my journey into the personal finance world. And later on, I developed my own system of investing. It's called the Millennium Money Making Machine Investing System. And I was really honored and happy that in the last years, I'm able to share this system with hundreds of thousands of people all around the world. You know, at events like this was an event in Romania, this was an event in London, in the UK, this was in Russia, in Moscow, where I shared the stage with my mentor, Brian Tracy. So last year in December, we shared the stage in Moscow and we spoke at the same seminar. And of course, later on, I also published my book, the international bestseller, The $1 Million Decision. It was translated into several languages, also Chinese, Mandarin, Bulgarian, and so on. And it was also published in India. So I also have a publishing house in India that published the book in India. Yeah, these are the translations. And the book and everything else brought me a lot of media attention. You know, I was featured in a lot of media stations. My favorite interview was this one on American TV. This is Newsmax TV, and basically I was teaching Americans how to invest. That is, it was really amazing for me because you know, a guy from a small Slovenia teaching Americans how to invest. It's quite an interesting thing. So if I just wrap up everything till now, knowing the right details gets you a great return. Ignore them and you just crash and burn. So when it comes to investing, you need to know the right details. Otherwise, the financial industry, advisors, and managers will take your money. Okay, so today I will not go through my entire system, Millennium Money Making Machine Investing System. It's not possible because I would need a couple of days to do that. But let me just give you a short overview of the system. So the system has 5 parts. The first step is increase your financial wisdom. So first you need to be financially literate, then you can move on. Then you need to protect yourself. So before you go and you try to get great returns with your money, you need to have financial protection. And here we are using gold and insurance products for this. So gold, silver, precious metals, and insurance products. Then grow your golden goose is your long-term investments. So these are mostly stocks. So long-term investing in stocks, long-term investing in bonds, and also you can have a couple of other options. Then accelerate your returns. This is for people who are a bit more aggressive and want to put a small bit of their money into more aggressive stuff, like for example, the crypto market and stuff like this. Dream Big and Share gives you the answer to the question, why am I doing all that? So why am I doing all that? Because you have certain goals. You want to achieve something. You want to give something back to the community, to your family, to your partners, friends, and people who you work with, and make a positive impact on the world. So this is the system, and I will not go into details, but basically all these games are rigged because the financial industry takes most of our money if you don't know the right details. And then I created my systems that can basically get your financials on track and to invest very profitably. Now, today, I would like to dive deeper into the first part of the system, and this is increase your financial wisdom. And I would like to share with you my financial success formula. This is a really important formula that can really make a big difference in your life and also in the lives of others who you share this formula with. So let me share with you what is my financial success formula all about. Now, this formula will give you the big picture of your financial life. Okay, so this will give you an overview of your financial life. And if you take care of the big picture, everything else will be much easier. So if you do it correctly, if you do it right in the big picture, your strategy, then everything else will be much simpler. Now, have you ever seen this Einstein photo? This is a photo of Albert Einstein teaching his students about general relativity. Okay. Now, a team of scientists in Washington, D.C., led by George Delaney, started to have doubts about if this photo is really an original or if it is a fake. Okay, why? Because it's a bit blurry, you know. It's a bit blurry picture, and they didn't know if it was really an original or a fake. So that is why they started to use high precision tools, software tools, X-rays to really analyze this photo. And after 3 months of hard work, they realized that this photo is a fake, that it's not an original. And that original, you know, when they uncovered the original, it looked like this. Looks like Albert Einstein didn't teach his students about general relativity, but about my financial success formula. Now, why would he do that? I think that the answer is because my financial success formula is much more important for our lives than general relativity. Okay, so let's dive deeper into this formula. Like I said, this is the key philosophy for your financial success. And if we go into a dictionary and we take a look at the word philosophy, we see that it means a theory or attitude that acts as a guiding principle for behavior. So if you have the right philosophy about a topic, then you can also have the right behavior. Okay, and because I didn't have the right philosophy about personal finance at the start of my career, I lost a lot of my money, and I got into all sorts of problems because I lost that money. So First, you need to take care of this philosophy, and when you have the right philosophy, then everything will fall into place. Now, how does the financial success formula work? It has two parts, okay? So first write down MM. So this is money-making skills, okay? Write down money-making skills, okay? So the first part of the formula are money-making skills, okay? So these are the skills that you use in order to make money, to earn money. And I will dive deeper into what these skills are a bit later. And then the second part of the formula are your investing and money management skills, okay? I stands for investing and money management skills. And when you have both, you can become financially successful. So financial success, FS. So money-making skills plus investing skills equals financial success. And now there are two parts or two important aspects of this formula. The first important aspect of this formula is that you need to have both set of skills, okay? You need to have both set of skills. You need to have money-making skills and you need to have investing skills. Only one set of skills is not enough. Let me give you a famous example. Do you know who this is? This is Mike Tyson, a very famous boxer. And in his career, he made 300 million US dollars. But in 2010, in an interview, he said, "I'm totally destitute and broke. It just happened." No, it didn't just happen. He lost all of that money because he was not financially literate, because he didn't understand the financial success formula. So he only had money-making skills, but he didn't have investing skills and he didn't have money management skills. So he just spent all of his money and that was it, you know? So the first important thing about this formula is that you need to have both set of skills. Now, what happens if you have no money-making skills, but you only have investing and money management skills? Here, the problem is that because you don't earn enough money, you will have no money to invest. So even if you are the world's best investor, the next Warren Buffett, you will still not get any good returns, you know, with your investments, because you will not have enough money to invest. And even if you live 150 years, the compounding principle will just not work for you, because you will be investing very, very small amounts of money. So you need to have both set of skills. Now, the important thing, when it comes to money-making skills, a lot of people don't really understand what are the money-making skills. So let me be really clear about what are the money-making skills. The most important money-making skills are the following. The first type of money-making skills are your technical skills, okay? So if you are, let's say, an accountant and you have a job with a bigger company, then accounting skills are your technical skills. If you are a programmer and you are employed by a big IT company, again, programming skills are your money-making skills. But of course, this kind of technical skills can only give you a certain level of personal income. Usually, they cannot make you rich. They cannot make you wealthy. Now, the skills that can really make you wealthy are a bit different. They are called business skills. Okay, business skills. Now, if you are not an athlete like Mike Tyson, or if you are not a famous singer, or if you are not a Bollywood actor that makes billions, then you need to have business skills to really become wealthy. Okay, and business skills are marketing, selling, leadership, negotiating, public speaking, communicating, and so on. So these are really important money-making skills that you can use in, also if you are an employee. You can use marketing skills, you can use selling skills, also if you are an employee, to get a raise, to get to a better position, to get a new job, and so on. And if you're an entrepreneur, you can use these skills to really make your business work. You know, without marketing skills, without selling skills, my business would suffer. I would never become a millionaire if I didn't have these skills, you know. So this is just to clarify what are the money-making skills, okay? And maybe in the Q&A, I can go deeper if somebody is interested, okay? Or maybe I can also give you some advice about a couple of books on each area that you can read or something, okay? Now, this is the first aspect of the formula. You need to have both set of skills. But then there is another important aspect of this formula, and here most people go wrong. And this is, you know, where do they focus, or what is their focus on this formula? Most people are not aggressive enough in the money-making part of this equation. They don't take calculated risks, and they are not putting in enough effort and training into these skills. And when it comes to investing, they take too much risk. They are too aggressive. They try to trade Forex. They try to make a lot of money with short-term trading stocks or currencies or options or whatever, you know. So they are too aggressive. And this takes too much of their time. They are active in investing world, and they are not active in the money-making world, you know. So, and this brings you to become a financial failure, because you are too aggressive in the investing part of the equation. You will most likely lose your money, because short-term trading, the markets, is usually 99% of people lose their money. And if you are not aggressive enough in the money-making part of the equation, you will not be able to make enough money to have something to invest, okay? So this is where most people are, and that is why they are financial failures, okay? Now, in order to become a financial success, you need to turn these things around, okay? You need to turn these things around. For example, in 2004, I made a big decision in my business. And that was, we took a lot of risk. We didn't have enough money. We borrowed some money, but we needed that money to invite Brian Tracy to my country, okay, to organize a first seminar with him. It was a big risk for us, okay? It was a big risk for us. And me and my wife, we had a tough decision. You know, it was a rainy night, and we made this decision, you know, in 2004 to invite Brian Tracy to our country, to take on this risk, and we did it, you know, but we didn't, you know, this was a calculated risk. We knew what we are getting into. We knew what will it take to make this event successful, and everything else is history. You know, we sold out the event. We got to know Brian Tracy. We became his business partners. We made a lot of money with that seminar, and you know, everything else followed. But without taking this risk, nothing could happen. You know, this is business. This is, you know, this is life. Without the risk, nothing could happen. So sometimes you just need to take some calculated risks. You cannot stay on the shore or in the safety all the time. You need to go out to the sea. You need to take some calculated risks. Now, the people who are financially successful, they are aggressive in the money-making part of the equation. They take calculated risks, and they put a lot of effort and training into this part of the equation. They read books, they watch videos, they go to seminars, they go to workshops, you know, they learn all the time. And when you learn business skills, when you learn money-making skills, everything changes, because you can increase your income sharply. And then when it comes to investing, you need to be careful. You need to be careful. You work hard to earn that money, but now you need to be careful, where do you invest it? You know, you don't want to get into some kind of Ponzi scheme. You don't want to lose your money trading, you know, day trading or something like this. So you need to be careful, you need to avoid mistakes, and you need to be passive. You know, active investing, trading all the time, it's a, it's a losing game. So you need to be passive. When you make your long-term investments, just let them run. Don't mess with them, you know, because you will make only bad decisions. So this is the important philosophy about investing. And you just need a bit of a good training, you know. Most of the investing training out there, it's really bad, you know, because they teach you all the wrong things. So you just need to understand some really important concepts. You need to understand how the fees affect your money. You know, this is one of the biggest mistakes I did in my investing career. I trusted a lot of my money to people who charged very high commissions and fees. And if you have, for example, 3% annual commission, we think, that's not a lot. But over the long run, when the commissions also compound, you know, I call this the dark side of compounding, you know, because compounding works very nicely. It compounds your growth, you know, of your assets. But also, compounding also works on commissions and fees that you are paying. So if you are paying 3% annual fee, this will destroy your capital in the long run, you know, and this is something that nobody talks about in the financial industry because it's not in their interest, you know. So I trusted a lot of my money to people who charged very, very high fees and commissions, and that basically destroyed my investments, you know, even if they were good investments, but because of the commissions and fees, they went down, down, down. So you just need a bit of good training, and then you can be financially successful. So in my book, I say, love risk when making money, hate risk when investing money. This is so, so important. Love risk when making money, hate risk when investing money. Now, if you just follow this financial success formula, and if you teach this formula to your children and to other people around you, there will be a lot of aha moments, you know. A lot of people will say, oh yeah, that's the right way, you know. And if I, like I said, if I knew this formula before I started to invest, I would be more than $1 million or $2 million richer than I'm now, because I lost so much money when investing it the wrong way. So this is really, really, really super important. And let me just you know, give you a slide with the short summary. So this is really important. You should have this written down on your in your workbook or notebook or whatever. Okay. So aggressive in the money-making part of the equation. Learn new stuff. Take calculated risks, and be careful and passive in the investing part of the equation. And you will be okay. You will become a financial success. Now, before we go to the Q&A, I would like to give everybody on this call a small gift. Now, you probably already know my best-selling book, The $1 Million Decision. And today, I would like to give you a gift. And this gift is the audio version or audio book for free. So I would like to give you the audio book, the $1 Million Decision audio book for free. So you will be able to listen to it on your phone when you are jogging, or on your computer, or MP3 player, or whatever, you know. So you just go to this site. So it's robertrolih.com/audio. So robertrolih.com/audio, and you will get to this website. And you just click on the button, yes, send me the audiobook for free. You enter your email, and you will get the access details to the audiobook in a couple of minutes. Okay, it's totally free. That's it. This is my gift for you. Okay, so that is everything from my side for now. And I propose that we go to Q&A now.
Yes, Robert. Thank you, Robert.
Over to you, Meghna.
Yeah. Thank you so much, Robert. It was inspirational to see how you worked hard and got, you know, made your vision a reality. And thank you for sharing your success mantras with us. We have a lot of questions coming in, and I'd like to start with the very first one.
Yeah.
Robert, can I request you to shut the screen, please, so that we can all see you well? Yeah.
Yeah,
Thank
sure.
you, Robert. So, yes, perfect. Yeah. So in one of your interviews, Robert, you had mentioned the book, Rich Dad, Poor Dad, being a great book. And incidentally, even our mentor loves that book. So, can you share your favorite things from that book, and as well as any other book recommendations for us?
Yeah, of course, Rich Dad Poor Dad, the most important lesson that I learned from that book is basically that you need to understand your personal financial statement. You know, what are the assets? What are the liabilities? What are these key concepts in the financial world that you need to understand? So you have income, you have expenses, and you have assets and liabilities, and you need to understand how this works. If you don't understand this, then you end up like Mike Tyson, losing your money.
Right.
A lot of people, you know, who earned a lot of money in their life, they lost that money because they didn't understand this simple concept, you know, that you need to invest in assets. When you are making a lot of money, or even if you make a small amount of money, doesn't matter. You always need to put something in assets, you know. You need to invest into something or save that money in order for it to grow. Otherwise, you can easily come into this rat race, how Robert Kiyosaki calls it, you know, where you just work for the financial industry. You take on new debt. You are just borrowing money, and then you need to pay off that money, and it's a never-ending story, and you cannot get out of this rat race. So this concept of personal financial statement is, I think, the most important one from the book. And but then, you know, when I learned that, something was missing for me. And that was how to make more money, you know, how to make money so you can invest in assets. And that is why I created my financial success formula. And that is why I teach this formula in my book, in my seminars, and so on, because it gives you another layer on top of Robert Kiyosaki's model.
Wonderful. Thank you for that, Robert. I'd like to call in Jyoti Barlia with a question, please.
Hello, Robert.
Hello.
Yeah, I'm quite impressed with your talk. Robert, my question is regarding the investment market, the financial market. How do we understand that it is overvalued? At times we hear that it is overvalued. So how do we understand that?
Yeah, this is $1 million question right now, because the problem is that the Fed, the American Central Bank, is printing so much money. And of course, also the other central banks are doing the same. You know, everybody is in the same situation right now. We are just printing money to try to get out of this recession. And in the last 100 years, for example, the central banks, whenever you had a recession, they were able to lower the interest rates to help the economy. But right now we are already at zero. We cannot lower the interest rates anymore. And this is the big problem. So now the central banks only have one tool left in their disposal, and that is printing more money. Now, what will happen? What is happening with the markets? You know, if you just take a look at the Warren Buffett indicator, this is the gross domestic product of America divided by the stock market, by the value of the stock market. It's hugely overvalued. It's at 170. It has never been so overvalued in history. You know, so by all the standards, we could easily say that the stock markets right now are, especially the American stock market, and especially the technology stock market, is really hugely overvalued. But the problem is, the thing is that the central banks are printing so much money that they are basically supporting this market. And I doubt that they can stop. They cannot stop. They are forced to continue with that, and they are forced to support the markets even in the future. How will this end? It's $1 million question, but something will have to give. You know, it cannot continue forever. So right now, for my clients, for people who attend my seminars, my guideline is that so in the beginning of this year already, my guideline was to increase our holdings in gold and gold miners stocks. You know, that is something that Warren Buffett just recently started. So we were before Warren Buffett, you know. But Warren Buffett, okay, he invested very small amount of money, you know, like 0.4% of his cash in the Berkshire Hathaway. He invested into the gold mining company recently. We were before that, you know, and my guideline was, you know, before 2019, my guideline for my clients was like have 10% of your portfolio in gold, just for safety, you know, just for safety, nothing else, not for growth, but for safety. Gold is just for safety. But in the beginning of 2020, I said to my clients, you need to take this percentage up to 20. You need to take this percentage up to 20, and this was a really, really good call because gold was skyrocketing in the last months, you know, and gold miner stocks also, you know. So because the stock market is so overvalued, and there is a risk that something can happen, you need to have more safety somewhere else. In gold, maybe also, I'm also investing in Bitcoin. You know, Bitcoin is a new gold, simply. So as a way to decrease my risk, I'm also investing in other things that will profit if something terribly wrong goes with the stock market. You know, like gold and Bitcoin.
Thank you, Robert.
Yeah.
Okay, Rachna, you can come in with your question.
Yeah, Robert, I would like to ask for your views on index funds. Should we invest in index fund? What are your views on it?
Yeah, so when you invest in the stock market, you basically have two options. One is to make to do a lot of research and to research different companies and to select the stocks that you will invest in. This is Warren Buffett approach. Okay, so he is basically doing the research. He is looking for undervalued companies that have a nice potential, and he is investing in individual stocks. The other way how to do it is a passive way, and this is investing in index funds. You know, my philosophy is to just invest in index funds. So I never own individual stocks, but I invest in index funds. Now, what is better? You never know. You know, you can only know that when you look backwards after 10 years. You know, but if we take a look at comparison index funds versus Warren Buffett in the last decade, index funds outperformed Warren Buffett by a huge margin. You know, Warren Buffett in the last 10 years, he missed out on the technology train. You know, he didn't invest in any technology companies that are really now the rulers of the world. You know, so it's very hard to say what will be the best approach for the future, but my approach personally is investing in index funds, you know, investing in the whole market, and that's it, you know. Because there are two reasons why I'm doing this. The first is it saves me a lot of time, because otherwise I would need to do a lot of research about every company that I'm putting my money in. And the second approach is that it's very hard to pick the winners, you know. It's very hard to pick the winners. Warren Buffett had amazing results for decades, but now in the last 10, 15, 20 years, his results are not so good, you know. And that is why I simply invest in index funds because they have very, very low fees, you know, because they have very, very low fees. So in the beginning of my career, when I didn't know these things, I invested in mutual funds. But mutual funds have high fees, very high fees, like 2.5% annual fee. But index funds usually have 0.1, 0.2% annual fee, and that is very nice. That is almost nothing. So, yeah, these are the two approaches, you know, and both approaches are okay. They are perfect, you know. But I just chose the passive one, and for example, Warren Buffett chose a more active one. And you know, if you have a good lucky hand, then you can outperform the market with Warren Buffett's approach. But also, if you are not so lucky, you can underperform. So you never know.
Thank you, Robert.
That was very interesting, Robert. I'd like to call in Sushila Jain with her question now, please.
Hello, Robert.
Hello.
Yeah. What are the 7 key important points to take care of while investing in turbulent times?
Investing in what?
Turbulent times.
In turbulent times. Okay.
Okay.
Yeah. This was a topic that I covered in one of my webinars recently. So the first thing, maybe I will not go through the whole 7. It will be a bit too long, but I will just give you the most important ones. So the most important thing is to protect yourself. Okay, so you need to have good financial protection, and this is something you need to have. If you have a family, you need to have life insurance. If you still work, you need to have disability insurance. If something happens to you, that you are covered. If you become an invalid or something like this, if you have an accident or something, then you need to have some gold. Gold is just for safety, like I said. But because we are entering the money printing times, or I don't know how can I call this, but the money is being printed in enormous quantities. Also, gold can be a good investment for returns. So let's say I have 10% of my portfolio in gold because of safety, and 10% because of growth. But this is just now in these times, because we have the macro picture of the world that is pointing to the currency debasement, because the currencies will lose their value when people start to spend again. So right now we don't have inflation in the United States or European Union. We don't have inflation because money is not moving. The velocity of money, so this is how fast money is moving in the economy, is really, really low right now. Historically, at the lowest point historically. And money printing is up, historically the highest point. So why don't we have inflation? We don't have inflation because we have so low velocity of money. Money is not moving around. People are not spending it. They are just keeping money, or they are just investing it in the financial assets. That is why we have so high stock prices right now. So because there is a big danger that when everybody starts spending again, we will have very, very high inflation, and that is why it's good to have some kind of protection, in gold, or like I said, Bitcoin also. Bitcoin is basically gold for new generation. Young people are not investing in gold. It's so old-fashioned for them. They are investing in Bitcoin. It's just a store of value. Bitcoin is not a currency. It will never become a currency, for transactions. It is just a store of value. You can have some money stored digitally, and nobody can steal that from you if you take care of your passwords, and if you don't write passwords on Post-it notes and put them on your computer. So I think that there is a bright future for Bitcoin and other crypto projects, but of course, don't invest half of your money into that. It's for small amounts of money. So yeah, take care of your protection. This would be maybe one of the most important things, right now, when you are in these turbulent times, and it's very uncertain what will happen. Nobody knows, nobody knows. You can ask 10 experts what they say what will happen, and they will give you 10 different views, so you never know. You need to keep your options open. You need to let's say, diversify into different asset categories. That is why I'm investing in stocks. That is why I'm investing in gold. That is why I'm investing in gold miners stocks that are very connected to the gold market, of course. That is why I also invest a bit of my money in silver. That is why I'm investing also in the crypto market. I try to keep my options open, and something will go up, something will go down, but my portfolio will be very stable in the future because I diversify.
Thank you so well.
The diversification is key, Robert. Thank you for that.
Yeah, this is just because we don't know what will happen. The most dangerous thing that you can do as an investor is to be too convinced about something, too sure that something will go up or that something is the right way. When I listen to different experts, for example, some people are just saying gold, gold, put all of your money in gold. Some stocks, you know, and so they have very different viewpoints. But you know, somebody will be wrong.
Absolutely.
After 10 years, somebody will be wrong and somebody will be right, you know, but now you don't know who. And this is the problem. That is why you need to have your portfolio diversified into different asset categories.
No having all eggs in one basket for sure. Yeah. Can we have Sonali Sonpal with her question, please? Sonali, are you there?
I'm having a low network today.
Okay, I'll ask you a question. Sonali was one. Yeah, Sonali, I'll ask you a question for you. So Robert, she wanted to know, is it a beginning of a new economy post-crisis? And what kind of industry will lose importance post the pandemic?
Which industries will be the most important after the pandemic?
Right.
Well, I'm not just looking at post-pandemic, but I'm just looking at the big picture of the world and where the world is heading. Okay. Now, the traditional sectors, basically they are all overvalued right now. Okay, maybe energy is down very sharply. But when I'm looking at more aggressive investments, you know, where will be the trends in the next decade? Mostly the new technology. You know, you have like Tesla is doing a lot of innovation and so on. The stock price is going, you know, like to the moon. But then there is, you know, this the whole blockchain technology market. This is also very interesting. Not, you know, not Bitcoin. Bitcoin is just for value, store of value. But I'm also investing in some other business blockchain projects, you know, like Ethereum, like Cardano, Chainlink, and so on. These are more aggressive plays, you know, for small amounts of money, you know, for a small percentage of your portfolio. Then I'm looking at these innovative companies, you know. There is also an index fund that you can invest in that basically covers these breakthrough innovation companies. It's called, I think it's ARC or something. Just put into Google breakthrough innovation ETF and you will find it. So they are basically selecting these companies that are making huge advances in the technology field, you know, like Tesla and other companies, artificial intelligence, cloud computing and stuff like this. So this is more aggressive, you know, investing into the new technologies that sometimes, you know, or maybe you will have an amazing returns, but maybe, you know, it can also go sharply down. You never know with these things. These are more aggressive investments where you need to put just, you know, smaller amounts of money into this kind of stuff. But yeah, this is the future, of course, technology, artificial intelligence, and stuff like this.
Wonderful. Thank you, Robert. Can we have Sunita in, please? She had a question on real estate.
Meghna, my video is not okay. Can you ask my question if you don't mind?
Yeah, you go ahead. We can hear you, Sunita.
Okay. I just wanted to know, what is your view on real estate as an asset class?
Yeah, real estate is like gold safety. You know, it's for safety. So I'm not investing in real estate apart from my house and you know, stuff like this. I'm not big on real estate, but it's not a bad investment. Real estate is always a good investment if you know what you are doing. But it's, you know, it's not a passive investment. You need to do a lot of research. So if you go into the real estate market, you need to read some books, you need to attend a couple of seminars, you need to spend a lot of time to do the research on the properties that you will be buying, okay? It's not a passive thing. Yes, you can buy a real estate index fund, but this is, you know, this will just give you very, very low returns. But if you want to really make some money with real estate, then you need to do a lot of research. It's like a business. It's like a business. It's like being an entrepreneur. Okay, so you need to put in a lot of your time and energy, and then it can work. So
Right.
yeah, it's a good investment if you know what you're doing.
Sure. Thank you.
But I personally, I decided not to go into this. So personally, my wife is totally, you know, she's very enthusiastic. She's very enthusiastic about real estate, but I'm not. I don't know. It's just not my thing.
Okay. Thank you.
So she hasn't been able to convince you yet, Robert, huh, about that?
She's. I think that she will. But I said to her, you know, if you want to invest in real estate, you do your research. I will not do it.
And the ball's in her court. Very smartly played, Robert.
I'm too busy running my business and teaching my clients and stuff like this, and doing research on other things.
Of course. Okay, Robert, I'd like to ask you, in your book, you spoke about the 6 dark forces of investing. You've touched about commission. Any other one which you think is the darkest of the lot?
Yeah, I would maybe just warn about the Ponzi schemes. Ponzi schemes are the schemes where somebody is presenting to you a very nice investment opportunity that looks brilliant, huge returns, very safe, and so on. Then you put in your money, and then it vanishes. The company is no longer there. They went to, I don't know, Bahamas, and they are there with your money, and you cannot get it. So one of the dark forces in the financial industry is that there are a lot of scams. There are a lot of scams, a lot of ways how you can lose your money. So my rule for investing is always keep your money on your account. Okay, so if you invest in stocks, don't give your money to a I don't know, financial advisor, and he will open an account and this will be on their account or whatever. Use a broker, use a stock broker like Interactive Brokers or whatever, you know, and money will be on your account, and you will invest in stocks, you know, or in index funds or whatever. If you are investing in gold, don't invest or don't give money to somebody who says that they will buy gold with that or whatever. But, you know, go and buy physical gold, and you will have gold in your hand, or buy gold through reputable online brokers that you know that this is your gold on your account, and so on. And of course, there are a lot of ads online. Every day I'm seeing tens of ads that are convincing me that something is a good opportunity, or trade binary options, or give us money and we will give you I don't know what, you know. But these are all very, very risky opportunities, because when you give your money to somebody else to manage, you never know what happens. And I try to keep my money in my hands, in my accounts. I don't give my money to managers or somebody that will manage it or invest in some obscure opportunities or whatever.
That is very sound advice. Thank you, Robert. We had a lot of questions still coming in, but we've run out of time. So I'd like to really thank you for all the wisdom you've given us. And I would like to hand over to Rachna for the vote of thanks, please. Over to you, Rachna.
Thank you, Meghna. Thank you, Robert. It was an eye-opener, that's for sure. And thank you for sharing your financial success formula with us. And this will definitely help us analyze our investments with more clarity. And we all wish you all the best for your future endeavors, and all the best to you. Thank you so much for being there with us today.
Yes, you're welcome. Thank you very much for inviting me. And I wish all of you big success in life, and good luck in your endeavors.